Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs. For more information, visit redcloudfs.com.
Good morning, everyone. Welcome to Digging Deeper, sponsored by Red Cloud. Red Cloud has provided an excellent guest, and we're catching up with the CEO and chairman over at Consolidated Uranium, Philip Williams. And I wanted to kind of have this discussion around a major purchase that you just did of Virginia Energy, but also around two major news releases amongst a lot in the last couple of months. This month, just out of the U.S., with a fact sheet from a U.S. and United Arab Emirates partnership to accelerate transition to clean energy, or the PACE bill, which is like $100 billion that they're putting towards clean energy, as well as the Biden-Harris clean nuclear energy infrastructure bill. So where they're talking about $6 billion towards different support of nuclear projects and facilities around the area to help emissions by 2035 and 2050. We see the adoption in Canada with the small nuclear or modular reactors. There's a lot happening in this space, and we're talking to a company now that has a lot of partnerships, a lot of projects, and now one of the largest, U.S. undeveloped project. How are you doing today, Mr. Williams?
No, I'm great, Andrew. Thanks for having me on, and I'm very excited to talk to you about that new project.
So we've had you on before. You've a lot of projects, and I mean we've seen that's a great way to add value as a company. We know, and we'll go through some of them, the strategic partnerships you've had. You've had a rollout and spin out of another company. So this accumulation of assets during troubled times is a strategy that has certainly worked in the past, but uniquely now because it really seems like, to me, that we're on that verge or that dawn of a new nuclear age, this kind of reality that this is the solution, and we better get on it before we waste that. We're wasting time, I guess, in a short.
Yeah, no, absolutely. And you talk about consolidation, and when we talked before, we went through this, but we started this company 2.5 years ago with this consolidation strategy in mind, because it was proven in a past bull market. And I think you have a slide there which is kind of illustrative of that. And when we started the company, we looked at what worked in the past cycle. So there was a big uranium bull market from 2005 to 2000, early 2007, and through the end of the year. And then some of the standout performers executed on a consolidation strategy. One of them was Mega Uranium. And so what we did at the very beginning was we said, okay, what did Mega do over that time period, and how did they perform? And so the chart at the top of this page here shows Mega Uranium from the beginning of 2005 to the end of 2006. You can see they completed a number of acquisitions. They raised a significant amount of capital, and their share price increased dramatically. It went up 3,400%, and the market cap increased from 15 million to peaked at $940 million at the end of this period. Of course, uranium prices were running. So you can see in the green there, uranium had gone from $20 up to $67, on its way to $137 in early 2007. But valuations for the uranium companies were moving dramatically. They were going parabolic. And it wasn't just for Mega, it was for some other companies. Energy Fuels was a consolidator back then. They did very well. Paladin, to name a few. So that was our business plan when we started. And now 2.5 years later, we show at the bottom of this page how we've performed. So in that similar period of time, we've acquired more projects than Mega has. We've raised similar amount of money, and we've had an increase in our share price 1,500%, and it's gone from a market cap of $2 million to about $140 million today. I think the point of this slide now is to say there's still a lot of room for valuations to run, particularly if you take the view, which we do, that uranium prices are going much, much higher from here. And it's really a function of a very small universe of companies, although it's growing every day, but also small on a market cap basis. When funds come into this space, whether it's generalist funds or even we're seeing clean energy focused funds are starting to go into uranium and nuclear. Once that kind of money comes off the sidelines and moves into this space, valuations can go parabolic again. Again, particularly if uranium prices move the way we think they're going to move.
Yeah, especially like you're saying, lots of startups, lots of companies starting to look at areas. But if you're holding on to some great projects, you already have them. So you have a basket of projects that are great. And we've gone through that in the past. And I'd say to someone, reach out to me. I can get them in touch with you if you want to. And of course, your website details them. But really significantly, the Virginia asset, is it Coal Hill?
Coles Hill.
Coles Hill is, I mean, this is enormous. This is a huge acquisition.
Yeah, look, and it really fits our model. And obviously, getting the biggest project in the United States is a tremendous add. And I will just clarify that we still have to take this acquisition to Virginia shareholders. They'll vote on it in January. We've agreed to terms with the company, and we've got significant support from shareholders. About 45% of the shareholders of Virginia have already locked up to this transaction, but it does have to go to their shareholders in total, and that will happen in January. So it should close in late January. But you can see where it sits in this map here. You can see how big it is. 160 million pounds of uranium in both categories adds a tremendous amount of resources to our global inventory of uranium. And you can see there we have projects all around the world and some of the best uranium and mining jurisdictions in Canada, the US, and Australia. But Coles Hill is sitting on the sidelines. Again, like a lot of the projects that we've picked up early on and as we continue to do, it's kind of been orphaned. And the strategy around creating this diverse portfolio really stemmed from watching single asset, single jurisdiction companies struggle to move their projects ahead and be exposed to the whims of particularly a jurisdiction that may go in and out of favor of uranium mining. And Coles kind of found Virginia with the Coles Hill project kind of found itself in that basket. And so, yeah, go ahead.
I was going to say it's important because I always like to find current topic to kind of that reiterates that. You look at, say, like Kazakhstan, which in the past someone would say, well, listen, if we need more, they can send more. They've got so much uranium there, it's not an issue. But that doesn't factor into the relationship they have with Russia. And there's politics going on there, but that kind of isn't totally off the table, but it's not positive. That seems to be that relationship with Russia, the processing in Russia, that is an event that can come up outside of people's thought patterns to go, oh, we weren't expecting that. And then you realize, well, where's our rest of our supply coming from? Where can we get this?
Yeah, well, and look, and if investors are starting to wake up to that, I can tell you that utilities, the actual buyers of uranium, woke to that issue. Actually, it predates the war in Ukraine. It goes back to some unrest that happened in Kazakhstan last year.
Yes.
And so as soon as that happened, and there was a recognition that there was some potential instability around that source of supply and some risk there, utilities, particularly in the US, were making calls to find out where they could source their uranium. Of course, they were looking not just in the US, they were looking at other countries, but I think increasingly they're looking for domestic sources of supply. And that's both internally because they think it's good practice to be able to source locally and have the security of supply, but also because the government itself is wanting to generate domestic production. And I can tell you right now, you've got a situation in the US where you have the largest nuclear reactor fleet. So the country with the largest uranium demand has effectively zero domestic production. The Q3 numbers came out for production in the US. It was effectively zero. So there's a massive disconnect there, and it has to, and it is going to change.
So what's that going to? I mean, what do you think it's going to take? Is it a matter of perception? I mean, we see there's the acknowledgement of the funds finally, and we're seeing typically it's been Democrats that have rejected the nuclear idea, but they're on board now. So it seems like we've got a lot of positives. Is it just a matter of we've got kind of an ugly, chaotic market? People are waiting on the sidelines, but it just needs that kind of nudge to help people kind of take the full commitment.
Look, I think you hit the nail on the head. This is a nonpartisan issue. So when we look at Virginia, for example, and Virginia has a Republican governor, and it has a split assembly in terms of Republicans and Democrats. That's not, to us, that's not an issue, and we think it's positive, but it's nonpartisan. Nuclear power, ergo uranium mining, is supported by both sides. I think what needs to happen, quite frankly, is price. So at current prices, particularly the spot price of $50, it does not incentivize new mines. Price has to go higher to justify turning these mines on. Lots of companies are making plans, including us, to move their projects ahead and ultimately move them into production, like we're doing down in Utah. And we've got drill programs underway there right now. We're updating our resource studies on the Tony M project. But we ultimately need higher prices to incentivize the new production.
Yes, and then I'll just throw that out there too. Like you have vanadium associated with that Tony M project as well. And not that we'll talk about vanadium, but it comes together often, and I see it as being an extra critical piece to our energy solutions long term. But it's great that you have that there.
Yeah, look, we're very constructive on the vanadium battery opportunity. We spent a lot of time looking at it, and there's new investment vehicles actually that have just been created, listed on the TSX Venture Exchange to give people exposure to that, similar to the Sprott Uranium Trust. Vanadium for us, we see it as a free option. It helps with the economics. If you put up that map of all of our projects, you can see we have vanadium in a number of projects around the world. As you said, they do come together, particularly in the U.S. The mill that we have access to, the Energy Fuels mill for our projects in Utah, it processes vanadium historically. It has a vanadium circuit, so we can actually extract the value from it. There are projects around the world that also have vanadium, that are producing uranium today or have produced in the past, but they never got value for the vanadium. We're in a unique situation with access to that mill.
Yeah, having that relationship and that partnership with Energy Fuels, that's another key component. I'm sure they're looking at you with lots of interest with this new acquisition. With the indicated pounds is, what is it again here? 132.9 million pounds indicated.
Yeah, it's a tremendous resource, and it stands out head and shoulders above the largest projects in the country, which might be less than half of that in size.
Yes.
Energy Fuels, it's interesting that you bring it up, because Energy Fuels was already a shareholder of Virginia. Yeah. So Energy Fuels owned about 15% of Virginia, and they own about 17 or 18% of us. And so just a natural acquisition for us. Clearly the team at Energy Fuels, who obviously we have a lot of respect for, like the company, like the project, and see it as a good opportunity for Consolidated.
And if someone wanted to, they could look back, and I'll ask you as a follow-up question. There's an old PA out on that project, that Coles Hill. Are you planning on updating it? Is that part of the idea long term? I know if someone wanted to go look at that, they could pull it up themselves, but I know you can't really talk about the PA as what that has in there. But is that part of the strategy to go, listen, we're going to poke around a little bit more, do a bit of work, and see if we can update that?
Yeah, look, that report gave us a lot of comfort in understanding what the potential economics can be. Yeah. As you point out, it's not current to us. Yeah. And we certainly have to update it. Obviously, cost inflation pressures are real. And so those numbers can't be relied on. But it gives you a sense of how this can be mined. There's in that study, we talked about a paste and backfill solution for the tailings, as opposed to a big tailings facility above ground. I think that's an important thing, particularly as we go to talk to locals about how this can be mined and mined safely. I think the strategy with Virginia is going to be one of engagement locally on the ground and within the state government and even federally, to talk to people about who we are and how we can move the project ahead safely. And I think we can leverage our partnership with Energy Fuels, of course, who's been one of the top uranium miners in the U.S. And so there's a lot of track record and history. Again, track record and history that Virginia on its own didn't have, that we can bring to the project. And then in terms of what we might do on the project, we do have exploration drill permits in place. So a pathway forward, if we were going to start working on the project, would be some drilling and then ultimately updating the economic study. We've looked at it, of course, and we have a few ideas of how we might improve upon it, but that would come in time.
And then you've got your financials are out yesterday. Is it? Yeah, it was just out the last few days.
Mm-hmm.
And you got 21 million in the bank. Doing fine for cash. Doing all right.
Yeah. Listen, we're fully funded to execute on the business plan we have in front of us. That cash has been very useful in making the acquisitions that we have. It's always helpful to be able to add cash into a deal. We didn't have to in the Virginia case. That's an all share deal. But if you look back in our history, we have used some of that cash on the M&A front. But really, we're pivoting, and we're going to continue to do things on the M&A front. But we're pivoting towards advancing our projects and earmarking those funds towards some of those projects to see A, if we can add resources, B, what the economics are, and we have a chart, a table of our portfolio and where the projects sit and how we're looking to advance them, and it's sort of instructive to how we'll deploy that capital.
Yeah, if we could just pull that slide up. Yeah, because I was going to mention, you've got like a kind of layered approach as far as timeline, resource, as well. So, and not to go through every project, but some are certainly near term, closer to in theory production, and ones are a bit more long term. So maybe you can kind of go over as this in this slide the general theme with that.
Yeah. So look, the whole point of the company is to ultimately build a multi-asset, multi-jurisdiction producer of uranium. That's the end goal. And so the way that we look at the whole portfolio is we say, well, so on the right-hand side of this table in that circle, those are the projects that are near-term producers. Those three mines are past producing mines. They were in production in the past cycle. They have resources in place. They're fully permitted, and they're within trucking distance of the mill. So they fit into that near-term production bucket. Our strategy is, okay, how do we fill the rest that bucket up with those 2 or 3 other projects that will be in near-term production? And so we have the 2 other buckets, which are the mid-term exploration development. So these are the rest of the projects that we've acquired. They have historic resources, significant amount of capital has been spent on them in the past, and we have plans to go execute some exploration programs there. And then we have the longer-term call options, which Coles Hill fits into, and Matoush. So these are bigger, higher grade, arguably could be world-class deposits that for one reason or another have an impediment to immediate development. If we can overcome that impediment, we think those projects instantly move over into the near-term production category, and we can and they have a tremendous amount of value. I mean, the valuation of those projects in the companies that they were in previously in the past bull market is well in excess of what our current market cap is. So either one of those projects, if we can unlock them, can be a tremendous addition to value add for the company and for our shareholders. And then we look at additional M&A as ways to fill those buckets, and we've got a full pipeline. And then ultimately, as we move projects into that right-hand bucket, and some projects won't go into that right-hand bucket. So what do we do with those? And I think we've shown that we have ideas of how to unlock value in some of those other projects through spinouts. And you mentioned Labrador Uranium. We took one of our projects, married it with 2 other projects from other companies, and created a new vehicle and listed it and distributed shares directly to our shareholders. I think there'll be other opportunities for us to create spin-out vehicles with some of those other assets, and so investors should continue to watch for that.
I like this graph too, and you can tell me if I'm wrong, because when I look at it, I see, okay, given the geopolitical events, you have this massive resource for the U.S. that could be North American focused. Australia gets you into a Chinese market where I think they're en route building 48 new modular reactors. So they're not committed to doing it. They're already doing it. So they're going to need a source, a constant stream of uranium. And then even Argentina, people don't realize that's a nuclear nation. So having something down there too adds a little bit of oomph to the portfolio.
Oh no, absolutely. And Argentina. So just to take a step back, yes, we purposely went to the better jurisdictions, right? So and how do you sort of qualify that with their mining jurisdictions, their first world countries? They have uranium mines in place. They have nuclear reactors in place. If you checked 2 or 3 of those boxes, that's a good jurisdiction for us to be in. And in Canada, Australia, and US check most of those boxes. Australia doesn't have nuclear reactors, but they have uranium mines in a great mining jurisdiction. Argentina, we were very comfortable adding because it's extremely prospective for uranium, and there's some great projects down there already. But for the reason you mentioned, it's a nuclear country. They have reactors. They're building new reactors, and they're looking for domestic sources of supply. We've seen the government with some of their own. They own some uranium projects that they're starting to bring back into, or looking at bringing back into production themselves. So we think it's a bit of a sleeper jurisdiction within our portfolio. Again, extremely prospective, and yeah, we're excited to do more in Argentina.
Yeah, it's interesting too. Like from my perspective, when you look at say lithium and with the Biden administration with their infrastructure green kind of bill, they included Canada to say, listen, we consider you a domestic source. That's amazing for Canada. That's also carries over for uranium. And I only bring it up because I'd heard from other like Australian lithium producers. They're like, well, we're not getting any calls from the US. They go, well, because they didn't consider you, whether or not you should be considered domestic or not, that's a different conversation, but they don't consider you domestic. So there's an advantage too to having these resources to supply a very committed on a large scale US push, whether it's like with the Defense Department acknowledging the need for critical metals from Canada and looking at projects. I mean, this is, I'm kind of looking for an urgency thing, which I think the story is developing. We see it in the news. We see that people are finally seeing injection of capital on a larger scale from governments. I imagine that's going to be followed by the funds soon when they look to go, let's focus on these fundamentals. Where is our energy coming from? Let's secure that. We can then worry about making cool apps, 2 years from now or something. What are your thoughts on that?
No, I think you're entirely right, and we're seeing it. And I talked about this a couple of minutes ago. I was in London recently for the World Nuclear Association conference, and went to meet with a bunch of institutional investors. Many I'd never met before. These were clean energy transition funds who now can suddenly invest in nuclear and uranium and starting to get up to speed on it. I think the funds are coming into the space. The generalists are looking at it. The one thing that we've had in this space is false starts. So in this 10-year bear market post Fukushima, we've had a few little run-ups that people have come off the sidelines and said, "Oh, now is the time," and unfortunately, it hasn't been the time. And all I know about today is the setup is better than it's been through that whole period, and universally, I think it's acknowledged both from the supply side, and we have a bias, of course, but on the demand side as well. And we're seeing it from some of even the industry groups who have been the most conservative in terms of saying now's the time, are banging their fists on the table. What's it going to take? What's going to move it? And we also have to remember we're in a global economy. So when there are things that are dragging down markets, it will drag down uranium. It will impact the way that the spot price of uranium moves. But the fundamentals are there. Prices have to be higher, and we need more supply outside of some of these higher risk jurisdictions.
And we kind of before the interview, we had talked about, people kind of sometimes waiting for new technology, or can we go entirely just solar and wind? And we can't yet. I mean, maybe in a decade, the technology would be there, but we know we have a solution today. We have nuclear. That's a solution. It's green. It's environmentally friendly. The toll on both environment and death has been minuscule compared to any other energy source. So it's the adoption that we could take. And that doesn't mean that we don't keep on pouring money into other solutions and technology as we develop. But right now we could tackle a large amount of that climate issue, the carbon issue, very quickly, and continue to develop other strategies. I think that's what's so interesting, to get that message across to people.
Yeah, it's not a zero-sum game. It doesn't have to be one or the other. And the fact is that nuclear power can be very complementary to solar and wind. And if we're talking about one versus the other, we're never going to get there.
Yeah.
But you have baseload power and you have intermittent power.
Yes.
And so they can work very, very well together, where you can guarantee that you have a supply of power when you need it, and the solar and the wind, particularly if some of these backup battery technologies come to the fore. And we talked about vanadium, and I think there's a very bright future for vanadium batteries and grid storage. I mean, these things can all come together and work very, very well. And then you add on, you mentioned this earlier, small modular reactors, and it just takes it to a whole other level, because you can put these reactors into much smaller communities and far-flung areas and get power to people that haven't had reliable, low-cost green power ever in their history.
We have a question here actually live. So congratulations on great work with CUR. Can you confirm on the VUI acquisition, upon closing of the transaction, VUI shareholders will receive 26 cents of a CUR share?
It's 0.26 of a CUR share.
Yes.
So it's not 26 cents. It's 0.6. So 0.26.
Yes.
So
0.26 of a share. Yeah.
Right. So the on the announcement, that was about 50 cents of value.
Okay.
We were $1.92, 0.26 times $1.92, about 50 cents.
Perfect.
There's been a bit of settle since we announced it, so it's probably mid to high 40s right now, the exchange ratio.
Excellent. Good. I just wanted to get that because a question did pop up here. So, all right, let's wrap this up because we've covered a lot and this is really exciting. What are some of the things short term as well that someone, if they want to look and go, okay, what else is on the horizon that you can talk about to keep their eyes open on the stock?
Yeah, look, I think the main next piece of news for us is in our U.S. projects in Utah. We're going to have an updated 43-101 resource on the Tony M project. That's the biggest project that we acquired from Energy Fuels. We're going to have drill results from Tony M that fed into that report, and from the RIM project, we're moving the rig to Dineros shortly. And then we have work programs that are going on or about to go on in our Argentine projects in Australia. Obviously, closing of this acquisition in January. And then the thing that I can't really go into too much more detail in is that we're very busy on the M&A front. You saw our strategy slide. You see the kinds of things that we're looking to do. Don't be surprised if more of those things happen in the coming months.
Excellent. Well, thanks so much. Always a pleasure catching up with you. It's an exciting time, and it is a difficult time for everyone as well. But I often remind people that it's these times, these chaotic, difficult times, when people are focused on other things, and we're in the midst of a major shift worldwide in energy and the way we interact. Now's the time for people to be looking at markets. And I would say this is the time where you can get things for a steal. So keep your eyes open. Really appreciate this, Mr. Williams, and I hope you enjoy the rest of the week.
Yeah, great talking to you, Andrew. Thanks very much.
Take care.
Okay, bye.